Hello traders and welcome to another video review. Today is Wednesday, December 13th, 2023. Let's take a look at the economic calendar for today. It looks like we are going to be busy, very busy today with the economic data releases. So overnight data published are mostly from Japan. Tankan, all big industry capex, big manufacturing outlook index, large manufacturers index, and large non-manufacturer index. All of this data had been published overnight. This is a bag of a mixed data. Mostly all of this data beats the expectations, except the big manufacturing index, which is a little bit lower than the forecast. 9 points was the forecast, actual number was 8. So pretty nice data from the Japan overnight. Now we got the bunch of data from the United Kingdom. Gross domestic products deteriorates from 0.2 to minus 0.3, which is below the forecast. Industrial production deteriorates minus 0.8%, previous reading 0%. Manufacturing production deteriorates from 0.1 to minus 1.1. Monthly GDP change at the same level, 0%, and trade balance deteriorates from minus 14 to minus 17 billion pounds, and trade balance of non-European countries deteriorates a little bit lower, minus 4.45 was the last reading, minus 4.83 billion pounds is the current number. So it looks like not really a good bunch of data of the GDP and manufacturing production together with the trade balance from the United Kingdom. The other data for today are the industrial production from the European zone, scheduled for release at 11 o'clock. Then we got the OPEC monthly report scheduled for release at 1 o'clock. Then we got the monthly GDP tracker from UK at 2 o'clock. And here we go with the key event for today. Core PPI from the USA scheduled for release at 2:30. PPI scheduled for release at 2:30, most important data. Crude oil inventories scheduled for release at 4:30. Fed interest rate decision, the key event of today, scheduled for release at 8 o'clock. Forecast is 5.5%, so the previous reading was 5.5%. The expectation is that the Fed will keep the interest rate intact. Of course, we got the interest rate projection for for the second half of the year and the third half of the year, and longer interest rate projections and stuff like this. All of that will be released together with the FOMC economic projections at 8 o'clock, FOMC statement, and 30 minutes later we got the FOMC press conference. This is the key event of today. Nothing else is that much important as the data from the US. So because of this, let's take a look how the basically US dollar is doing and what is doing the SP 500 ahead of the Fed interest rate decision. For our chart of the euro dollar, yesterday's data has made the euro dollar to jump a little bit towards the technical resistance. Nevertheless, the bears were too weak to break above the level of 1.0822. We have a nice spin bar here and a long upper shadow. So we should expect the market to move lower. We can extend our line here, and of course we can move our red arrow here. So we're still patiently waiting for this market to reverse lower. The key, of course, technical support is still located at 1.0694 as indicated by the blue arrow, and the other blue arrow is of course indicating the key technical resistance, 1.0888, 1.0895. So that's the situation on the euro dollar. Not too much volatility ahead of the interest rate decision, so the market participants are preparing themselves for the key event. The intraday technical resistance is located at 1.0801. So that's the intraday resistance, and The intraday technical support is still 1.0770, and then there is a support until 1.0747. This one was tested many times, so might not be that strong. Key low, swing low, local low 1.0726. But first we need to break below the trend line support. Momentum right at the level of 51 points is the exact number of the momentum, so we should see this momentum not moving too much ahead of the Fed interest rate decision. If there is any surprise like hike or a cut of an interest rate, we should see big movements up and down here on the momentum. Okay, so that's the euro dollar. Let me just take the screenshot of my analysis, so everyone will stay on the same page. So I will just do the screenshot, and we go to the, where we go, US dollar index or S&P 500? S&P 500. So S&P 500 for our chart, very nice movement to the upside. The recent high 4,649. Let's just switch to the daily. Because you can see it straight on that we made another swing high. Look, there it is. 4,612 has been violated, so will act as the technical support right now, and the new high at 4,649 was made into the extremely overbought market conditions on the daily RSI. Daily RSI is right now 63.80. Okay, now this is the positioning way ahead of the Fed, because the low was made on the 27th of the October, but just recently we went to the horizontal, let's say, movement for at least like 2 weeks, and at the beginning of this week and the end of the last week we started to move a little bit higher, and we broke the last swing high. Let me just zoom out for you guys to see something. This is the beginning of the 2023, so that's basically somewhere that lows, around that lows we are in the beginning of the 2023. First wave up, correction, second wave up, correction, and so on. Now the target with this kind of a movement is located at the high of the 2022, which was made at the beginning of the January. This is January 4th, and the number is 4,817. This is the swing high from 2022. Is this the target for the bulls? Yes. This is the next target for the bulls. If we get a little bit closer, maybe not like this, we should see, can we see the target? There you go. This is the target. This is our recent movement to the upside. We should see this movement as an impulsive one. Okay, so as long as we trade above the last swing high, this swing high must be tested so we can see some kind of a pullback and then the movement to the upside. Of course, there is nothing unusual in this kind of a behavior. If the Fed will keep the interest rate at the very same level, then the last year high will be hit without any problems. US dollar index, this is the US dollar index, is doing something else. US dollar index, as you see, bounced from the 61% of the Fibonacci retracement, made a low at 102.44, and then bounced nicely towards the moving averages, and now we got the moving averages cross. This cross is a bearish cross because 50 periods moving average on a daily crosses from the upside the 100 periods moving average on a daily time frame chart. This cross occurred roughly around the level of 104.46, and the local highs, as you can see, were roughly around 104.17.20. Okay, that's fine. We will treat this level as the intraday technical resistance. That's nothing wrong with this. Nevertheless, that movement to the upside looks exhausted already, and it looks like almost completed. Why? Because this movement to the upside, percentage-wise, is 1.76% into the 50 points on the RSI. So we are just hovering around the level of 50, the neutral level, but we didn't cross it yet. So if there is no big spike to the upside, and this spike might be done only if the Fed will hike the rates, because that means that the cheaper rates was already done, and now it's only it might only get expensive. So it's better to buy now than to buy later, because the market because the interest rate will make the currency of course the US dollar much more expensive. So if we see spike to the upside, it might be connected with the Fed interest rate decision. That would be either leave the rate at the same level or a hike. It doesn't matter how big. There will be, then in that situation, it should be a hike. If there is a rate cut, market will go lower, most likely. So that's the outlook for the US dollar index. As you can see, everyone is waiting right now for the interest rate decision by Fed. So we are waiting as well. We got the plan. Very nice movement to the upside, correction to the 61%, and now the situation is very, very tricky. So it's better to wait and see what will be the outcome of the interest rate decision, and what will be the statement of the projections made by Fed. Those were the most important currencies, basically assets that that might get violated during the interest rate decision and a little bit after. So US dollar index, SP500, euro dollar, all connected with the US data. So please stay focused and be careful trading this kind of events. As you can see, volatility decreased. Market participants are positioning themselves ahead of this event. So during the event, especially if there is a kind of a surprise, up or down, doesn't matter, volatility might jump significantly. All right, so please stay focused and stay on your toes. Watch the markets and see the reaction of the markets for this very, very important event. FOMC interest rate decision, 8:00 p.m. Today. That's everything from me for today. Thank you very much for watching this analysis. If you like it, hit the like button, subscribe this channel for more videos like this. And if you want to stay up to date with all of the newest technical analysis of the various assets. Thank you very much for watching. Take care, guys. Bye bye.